Good morning friends, this is Kaustu from Fundamental Desk. We are closing our call from switch call from HUL to ITC with a net gain of around 12%. This is ahead of broader market performance of around 6% since our initiation of call. We initiated call on December 2nd, 2011, and since then the call has given the net return of around 12%. The ITC performed extremely well during the period, despite of fact that the government has increased the taxes on cigarettes sharply by around 22%. Also, we have to consider that despite HUL performed really well in terms of financial performance, they have beaten the street expectation for past 2 quarters. Despite of that, ITC gave us the return. ITC gave a return of 25% in the relative terms, while HUL just moved up by around 12% in relatively. So there is a net gain of around 12%, and the key reasons why we are closing the call is that when we initiated the call, at that time HUL was trading at around 38% premium to ITC. Normally HUL trades at certain premium, but it was trading above the mean premium of 25%. But since after the sharp appreciation into ITC stock price, this premium has come down to around 13.6%. Also, we have to consider that after the strong performance for last 2 quarters by HUL, the earning estimates for HUL has moved up. Because of that, the premium has also come down. So because of the narrow down of the premium of HUL to ITC, we are closing our call. However, from a longer term perspective, we believe that ITC is better placed, considering the fact that its core cigarette business performance, the elasticity of ITC cigarette sales volume is inelastic to the market environment. Also, whatever investments have been done in other businesses like non-cigarette FMCG businesses, HUL business, or for that matter agri business, we believe that it would start contributing substantially to the bottom line in the near term. On the other hand, HUL's margin is susceptible to the volatility in the raw material prices. Also, we have to consider that rupee has depreciated substantially, which will further add on pressure on the, which are likely to add on pressure on the margins if the trend continues in the coming quarters as well. Also, in the recent times, we have heard the news of the subnormal expectation of the subnormal monsoon. Now, rural economy is highly dependent on the monsoon, as agriculture is the key determinant for the rural economy, and rural markets contribute around 50% to the HUL's top line. So in the scenario of subnormal monsoon, we might see HUL getting impacted because a larger chunk of its revenues is coming from the rural India. So these are some of the key risks which are there lying ahead for HUL. But for ITC, we believe that it is better placed in the current environment of macro uncertainties. Also, it has strong balance sheet. So from longer term perspective, we still prefer ITC in the FMCG space. Thank you.